Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and policy impact. I'm Govindraj, Ethiraj. Some 14 states have notified the government's new Real Estate Regulation and Development Act, while another 14 are set to ratify it in coming days, according to reports. Now, the new act, RERA, all real estate projects and property agents have to be registered with the government by July 31st. States are supposed to notify the real estate rules, including agreement for sale rules, and establish real estate regulatory authorities and appellate tribunals. Now, the questions we are asking is, how does life change for you, the owner or the buyer, from now on? Will transactions become easier and safer? Will the experience be the same across states? And what will change and not? To discuss this, I'm joined by Pranay Vakil, Chairman of Praron Consultancy, former Founder Chairman of Knight Frank, Abhash Sharma, Director Corporates at India Ratings, and Manoj Kumar, Partner specializing in real estate tax at BMR Associates. Thank you all for joining me. Mr. Vakil, let me begin with you. So, a broad sense, I mean, this bill has been in progress for a long time. Finally, it's here, it's being notified. How does life change? The
life for the buyer obviously will change quite a lot. But the life for the developer is going to be more difficult. I mean, this is obvious.
Yeah.
Now, don't expect a knee-jerk reaction anywhere, because this is going to evolve over a period of time. Let me tell you why. If you see the act, there is 700 million square feet of space, residential space, that is being created, which will require registration. All of it is over a plot which is more than 500 square meters and all of that, right? Or more than 8 flats per building, which is the exempt part. So if you're looking at registering 700 million square feet, do we have the machinery to do it? Is the question number one. And if we have the machinery, it's not going to happen overnight. It's going to take about 6 months at least, maybe a year, by the time all the states are fully compliant. Not only in terms of setting up the website, but also having the regulator, having the rules in place, debugging those rules as you go along, and all of that.
Right. And now, in addition to develop, I mean, even the brokers and other intermediaries have to register.
Absolutely, yeah. I mean, it's going to be a safer world than what it is today. It's a cowboy world today, where people are getting away with murder, as you know. Some of the developers have delayed it by 7 years, 10 years. They're not refunding the money. Some of them have even disappeared, as you know, right? Now, that's a story of the past.
Right. And I'm going to come to why that will happen in a moment. So, get your sense. I mean, if you look at the economics of the industry, is the industry better prepared for regulation, or can it be regulated better?
There were some players who were kind of disciplined. So some of the parameters which has been prescribed under RERA, some of the players were already doing it suo moto. But then there were many unorganized players who were developer. They are, they are probably not equipped with the kind of regulation they are now there in the industry. So they will have tough time.
Right. So the estimates I read, for instance, was that from thousands of developers will come down to hundreds. Because only, right? I mean, is that a fair estimate? Or?
There are 76,000 developers, if you look at all over India. All right? I think there is going to be a consolidation. At least there are 2 people I am talking to who are developers, family developers. They are saying, look, it's not worthwhile for us to continue. We're going to close shop. And if there is somebody who is willing to buy the land which we have, the land bank,
but
we are sellers.
Right, but what's the trigger for them to shut shop and sell? And
see, this is only for corporates to fall in line, to be compliant, to be vigilant, to satisfy every need of the regulator. It can only happen for organized players. The unorganized players who are willing, so far used to taking partly in cash, partly in check, they're going to find it very difficult.
One of the, Abhash, if we were to look at the solvency of the industry, the reason I'm asking is, if we are going to get into a period of forced consolidation, will buyers or consumers, people who've paid already for houses, will they suffer?
I don't think so that will happen, because there is a fathering clause even in RERA, that even if you are trying to sell off your stake to some other developer now, that developer will be responsible for the development of the previous property. Having said that, as Mr. Vakil rightly put, that the success of this act will lie basically in the execution of the act, right?
In a particular state, yeah.
In any particular state. Say, for example, in Mumbai, Sometime back there was Mumbai municipality didn't maintain the database of OC not given. Now, as per the new rules which Maharashtra government came out, all the under construction project where the OC is not given will be part of RERA. So they have to be compliant with the RERA. There are around 14,000 between 2002 to 2012-13. Around 14,000 of the projects applied for OC. Only 6,000.
This is just in Mumbai city.
Just in Mumbai city.
Okay.
6,888 only got OC. So balance 6,000 or 7,000
do not have occupation certificates. People should not be living in them.
Now, if we were to assume the RERA has to come up in its avatar as it is, those 7,000 people or those 7,000 project has to be compliant with RERA. That is additional burden. Probably those people are happily living already in their apartment and they don't know what is coming to hit them. Right. They are already living. On the other hand, the developer also might be under pressure because if the delivery has not happened, delivery is defined when the OC is given. If the delivery of the project has not happened, developer is supposed to pay the penalty. The interest rate is defined. So can a buyer who already occupying the house ask developer to pay the penalty from 2002, 2003?
So these are questions which are to which answers are not clear.
Right.
Okay. So let's get down to enforcement, Mr. Vakil. So all these things mean, I mean, as you've been pointing out, that life is going to get tougher for developers. So how does a consumer or a buyer of a apartment or flat enforce this? What do I do and who can I reach out to?
First of all, the buyer should be willing to wait. Why? Because until the project gets registered, you put your buying on hold, unless you have already done it. But if you are a buyer now, put it on hold until the time you visited the website, you checked out everything, whether he has the commencement certificate, whether he has the approvals in place, how many has he sold, all of that information is very, very useful.
Yeah. But first of all, he should have been registered.
You are now an informed buyer. Hitherto, you could go to a developer and he will not even tell you how many are sold, how many are not sold. What is the stage at which the approvals are, what is the stage at which the construction is. None of that is. But now it's mandatory.
Yeah.
So you're making the buyer aware. After that, if you make a mistake, it's your mistake. Don't blame the developer for it, is what I'm saying.
Okay.
But if you're saying that if you're already wrong in the past and you need to correct yourself and the occupation certificate is not obtained, and that is the crucial thing. If it is obtained, then good luck to you. I mean, you can fight a battle in the consumer court or go to the courts and stuff like that. But assuming that you are 80% of the way there, you have not got your occupation, the occupation certificate is not there, and you find that there are delays and all that, first check out on the website, what is the problem? Is title a problem? Is money a problem? Is size a problem? Is approval a problem?
Okay.
What is the problem?
Right. And then what do I do after that?
And then you go to the developer and say, what are you doing? Are you able to refund the money to me? You may not want to refund. The prices may have gone up.
So let's assume he can't refund or the developer can't
or he
refund
doesn't want to ask for a refund why the prices have gone up.
Right.
At least he can make a case saying that he would like to know the status.
So my question is, can a buyer individually approach the real estate regulatory authority or tribunal, as the case may be?
Sure.
Yes.
That is what
so that process will come. So that's like a court. I mean, I'll have to go there and file.
You will have to, seek an appointment, say what is wrong with it, and then
and what about the machinery to address or redress this?
I mean, it will evolve.
It will evolve. Okay. So it's all coming into place right now.
That's right. I personally feel that all the states for the first 6 months should not take a very hard stand. For the first 6 months, don't sell anybody to jail, is what I'm saying. And because this is something which will evolve over a period of time, I told you about the size, 700 million square feet and all that. All of that will take time. So for the 6 months, and I'm sure the government is doing it, they'll take a liberal view, give time to the developers, to be compliant.
Okay. Abash, how do you see this going forward? I mean, in terms of, again, let me come back to the economics. In terms of the let's say the health status of developers who are executing projects right now, the ability of them to deliver those projects and the buyer's comfort. And should buyers generally be assured that things can be more secure going forward?
So if you see from the health perspective of the developers, if you see top 10 developers who are listed, I mean, the industry is very much fragmented and organized little. So even if you assume that the organized players are proxies to the market, We see last 12 months the sales are down by 20%. In the March quarter itself, the sales are down by 56%, whopping 56%. The registration in Mumbai alone is down. So every trend says that the real estate was downward trajectory. So there was cash flow pressure on the developer already. On top of it, now there was some developers who, I mean, this was doing of the developer as well. I mean, you just can't absolve developer for everything. So there were some developers who could still arrange money. Some developers could not arrange the money. Now, the delay portion is not entirely controlled by the developer. You know, there is another function which has to approve efficiently. Now a lot of developers say that the approval is not coming on time. They may be in financial pressure or they may have their own trouble and therefore they are blaming the system for that.
Right.
But there could be other developers, set of developer as well, which were right, and actually the approvals were not coming in time. So for approval not coming in time is government responsibility. Like they need to provide the approval in time. So they need to evolve a mechanism there as well that the approval becomes fast track, and then for the problem of government, now developer has to pay.
Right. Okay. So, I mean, there are issues to be ironed out, as we're saying. Okay. Like, can I get a last word in from Manoj? Manoj, your outlook in 30 seconds. I mean, do you see things improving, or do you see, a lot of complexity still to be resolved?
Yes, there is some complexity still to be resolved. But what now all home buyers have to do is wait and watch the next few months. And then they get a large avenue, which is where they can go to the real estate regulatory authority, which is going to be set up by all the states. They can first go to the authority if a project is not registered, which can be a company if that is not done in the next 3 months.
Thanks for that. Last word, Mr. Vakil. So, all in all, I mean, while we clearly see some glitches and hitches along the way, we are entering a world where real estate buying is going to be safer and more secure. Just to sum up. Yeah.
Absolutely. Except that there is one stakeholder that's been completely missed out in this law, and that is the government. The people who are approving the plan. There are obligations put on the buyer, there are obligations put on the developer, there are obligations also on the bank to fund the whole thing. Where is the obligation on the government,
to deliver on time?
Except, there is one clause which is really salutary in the whole thing, that you file an application, if you don't get a reply in a month, it's deemed to be approved.
Yeah, right.
That's very salutary.
Well, we run out of time completely. We need to go in for a break. Coming up on the other side, Indian stock markets continue on their strong run. Small investors are getting tempted to get in. Should they be careful, and how? Joining me to discuss this are Ajay Bagga and G. Chokalingam. Stay with us.
Farmer suicide is happening because of distress sale of his produce. We need to do is probably increase the number of food processing facilities, industries near the production sites. If a farmer can keep the harvested tomato for 1 month, he will get at least 4 times the price that he will be getting at the time of harvest. He will be really actually rich.
Watch Eureka with Dr. K. Alagusundaram, Deputy Director General, Agricultural Engineering Department, ICAR, only on Rajya Sabha Television.
Welcome back to Policy Watch. It never seems to stop. The markets had a very strong week with the BSE Sensex once again going above the 30,000 mark, a little shy of its record high of 30,133 the week before, whereas the Nifty 50 hit a record high of 9,359. Now, both indices finally closed lower on Friday on profit booking. The strong markets continue to be driven now on strong liquidity flows and a feeling of confidence in India's economy and polity. Now, there are concerns, though, that retail investors could get hurt if they were to jump in now. So the question we're asking is, how strong is this rally and how sustainable is it, whether it is for issuers like the Government of India itself and retail investors who are watching from the sidelines? What should be the way forward for all? To discuss this, I'm joined by market experts Ajay Bagga, who's also chairman of OPC Asset Solutions, and G. Chokalingam, founder of Equinox Research. Thank you both for joining me. Ajay, let me begin with you. So if we were to sum up for someone who's just sort of started watching the markets, as usually people are tempted when things hit a certain record, what would you tell them in terms of retracing what's been happening in the last few months?
Yeah, see, right from the Trump victory and then the UP elections, which the BJP won handsomely, there have been 3-4 big trends emerging. One, the global macro is on a strong recovery path, so that's leading up markets. Second, liquidity is quite strong. There is a liquidity moving out of US into Europe and emerging markets. We have been beneficiaries of that, though for the last 8-10 days we have seen negative numbers from FIs. Third is the political stability in India. So after the UP election victory, the government is viewed as that this national government will probably stay for the next 7 years. So there's a lot of premium for good governance and strong political stability. And fourth is the earnings recovery is looking nascent and seems to be finally sprouting in India. Demonetization has had literally no impact on the economy.
At least on companies and
yes.
Yeah. Okay. So, Choka, if you were to look at it bottom up, this is the top down, let's say. Bottom up, how are you looking at companies whose stocks people buy performing or having performed in the last few months?
Yeah, very interesting question. Actually, very rarely what we are seeing now, at bottom up, using bottom up approach, we are not able to find ideas because there is no valuation comfort in the small and mid cap. But still, a lot of retail investors, many of them are very innocent investors, keep buying small and mid cap. In fact, that is the reason large cap stocks like Lupin, Tata Motor, many of them are keep falling, and because people are liking the solid momentum in the small and mid-cap stocks.
So are you saying this momentum in small and mid-cap is more pronounced than perhaps what we've seen in earlier phases?
Certainly. Earlier, whenever you used to see the solid boom in the market, one or two themes would play out. This time, so many themes. Microfinance to retail to so many. You can think of so many themes. Tire.
So which to you suggests that this is more irrational than rational?
Certainly. Because if you look at the household financial saving incrementally, which is less than 1 lakh crore, going into including debentures. But today, very interestingly, when 2015 March Sensex hit around 30,000, the entire BSE market cap was around 104 lakh crore rupees. Today, it is about 125 lakh crore rupees. So the Sensex remains same. But the entire breadth of the market in terms of valuation, value has gone up by 18% to 125 lakh crore. That is not supported by the fundamentals.
Okay.
So if you assume even 1% of that come for selling, which is almost $20 billion, there is no appetite because FIs are continuously selling and they never buy this kind of small and mid-cap stocks.
Right. So, and you're saying most of these mid-cap action is really because of smaller investors, individual investors, as opposed to foreign portfolio investors buying directly from the market as opposed to even mutual funds.
Certainly. That is what happening.
Okay.
So people are tempted to buy 100% of the portfolio only mid-cap. And this time, third year in a row, the mid-cap is doing well, which was not the case in the last 10, 12 years.
Right.
Roughly, alternate year, either mid-cap or large cap will do well.
Okay.
But this is continuous.
But you're saying this time is pronouncedly different from previous occasions.
Which is not supported by the liquidity.
Okay.
So if the selling pressure comes, they will crack like anything.
Okay.
So that is a fear.
Right. So Ajay, let me bring you back. So is this a sort of somewhat dangerous phenomenon then, at least at the middle level in the markets?
Yeah, valuation-wise, markets are overstretched. Overall. And mid-cap, definitely. Mid-caps are always at a premium because they grow faster. They are smaller. And they can also be influenced because what Choka said, liquidity is not there in the stock. You buy a little bit of that stock or you can corner the stock and take it up. So there are informed buyers in the market always who align with promoters and take up the stocks.
Right. So can I ask you a sort of converse question? People buy mid-cap stocks because people are trying to spot emerging companies or companies of the future. So you buy them because you think they're going to grow. And if going by what you said earlier, that the India story is looking strong, economy is growing consistently, then why should I not be buying companies which are small today and might become big tomorrow?
See, what we say is the retail investor, you're much better off in a mutual fund. The fund manager will do the research, will pick up 40 stocks. Out of that, say 25 to 30 do well, 10 turn out to be duds. You're well diversified. What people do is they get in at a very high point of the market. So one good thing is Indian investors have become very wise. They're doing SIPs. So 44,000 crores came last year by SIPs. April itself, we saw 4,500 crores. So that is increasing. Nearly a crore plus of SIPs are there, systematic investment plans where people invest as low as 1,000 rupees every month. So a huge retail base is investing.
Right. So I'll come to that in a moment. So just to come back to this mid-cap problem, I don't know if it's a problem or it's a a phenomenon. But how does one address this? Should there be more regulatory oversight, or should it be left to investors finding out the hard way?
Yeah, just to take a little digression, earlier question asked to Mr. Paga. You know, the mid-cap only becomes a large cap.
Yes.
Once upon a time, Wipro, Infosys also was they were mid-cap stocks. In fact, small-cap stocks. So I don't deny. The opportunities are plenty. But the point is 70 to 80% of the small and mid-cap stocks, they don't have durability in terms of consistent business growth or consistently improving the market cap. So, and second, 70-80% of the disastrous cases come only from the mid and small cap. So therefore, it's a problem. So there should be more, stringent regulation in terms of,
So when you say regulation, I mean, this is a policy show. So what do you expect, or what do you propose should be done in order to either for the regulator to be more cautious, or for investors to be more cautious when they are doing their investing?
There are two things one can do. Like for instance, a lot of marketing efforts are done by unknown entities and individuals in the small scale space. And if you look at the fundamentals, you look at the balance sheet, there is no fixed assets. All capital employed is given as a loans and advances. But those stocks also keep.
But a lot of people don't study balance sheets perhaps the way you do. So what do they do then?
So therefore, the regulator can filter out very suspicious, the balance sheets where the promoter holding is 5%, 10%.
Or at least highlight them. Yes.
Highlight them and have a list, and that can be.
But we have a list already, right? We have a penny stock list or a Z group.
No, more actively, these can be, publicized regularly, and more than that, directly that can be controlled, because only the authentic investment advisors, portfolio managers should give recommendation. Today, you see a lot of people, through SMS, WhatsApp, through social media, very difficult for regulator, but there is a scope for curtailing that.
Yeah, even I get those SMSs, buy this at
Even
this price.
I get it.
Yeah,
I
we
got
all
calls
get it.
also.
Yeah.
Personally calls also.
Yeah.
And there are some stock, I got the call, when I saw the balance sheet, the total capital employed is equivalent to the loans and advances.
Okay.
There is no factory or nothing.
Right. So Ajay, again, just to stick to the policy point, and then we'll come to mutual funds. What should be the caution levels being exercised at various levels, beginning with the regulator?
Yeah, see, it's a very difficult thing. So it's easy to blame the regulator, but it's such a huge country, and people devise new ways every cycle.
Not to blame. I'm saying how do we improve awareness?
But I would say you have to do a lot of education. What the mutual fund industry is doing, that is good. ETFs, index, funds, those are where, even the government, they collect a lot of money from various intermediaries. They should be telling people that start with index or ETFs, exchange traded funds with a basket of funds, rather than go into specific. Specific stocks should be an accredited investor very late in life. Here what is happening is the IPO boom, for example, that leads a lot of customers. And when the market is going up, everybody thinks it's because of their skill set. And when it goes down, they blame the market. So every time there is a fool born in every market. And what we always say is, if you don't know who's the greatest fool in the market, it's probably you.
Right. Okay. So on mutual funds, before I come to the outlook for the market, we are obviously, everyone is saying that you should put your money in mutual funds, systematic investment plans are good. We're seeing 4,000 crores per month of inflows. Aren't mutual funds also now getting overloaded, and maybe will lose their ability to invest as precisely or efficiently as they did before?
Like one mutual fund shut down their fresh, stopped
accepting
accepting in the micro cap fund. So clearly,
the only reason I'm asking is, everyone says, okay, don't invest in individual stocks, go to mutual funds, right? So, but if everyone goes to mutual funds, we could see some similar problems there. I'm asking.
Yes, there will be problems, and we would depend on the fund managers to stop inflows at some point and launch a different theme then. Second is the large portion should go into index funds, very low cost ETFs, Vanguard kind of funds, which are index funds, which give a lot of diversification at very low cost of 20 basis points. I think that's where it will, overall it will go.
Right. Joka, what's your sense? How should people approach this market? My question is really, should everyone then start rushing to mutual funds, which is being touted as the solution or the one-stop shop solution? And if so, is there a risk or a systemic risk that's being created?
No, systematic risk is created. I agree with colleague that it is very difficult for the regulator. Because the problem is with the investors. They have to be content with the expectation. So many of them are too greedy. If you tell large cap stock you buy, you can get 15% a year. There are some people laugh at us and saying that they made money overnight 20%. So problem is with investors, and because every bust people like us get after 2-3 years a long list of stocks which are suspended by the exchanges. So therefore, I would say that the investors should moderate their return expectation and go after the investment advisors, the portfolio managers who have got a credible history.
Right. Okay. So now let me get a quick outlook from both of you. So given all of this, what's your sense looking like? I mean, if you were to look at the flows we're seeing, domestic, global, how things are converging,
I am scared. I may be wrong. I am scared.
Okay.
As I mentioned, 125 lakh crore. In 2008, entire BS listed market cap was only 58 lakh crore. Where is the kind of money? If smart promoters, big investors, if they take out even 5%, forget 5%, 2% of this 125 lakh crore, if they encash, there is no support in the system. So the mid-cap and small-cap pack will crack like anything.
Right.
So I am really scared.
Okay. So be scared, be aware. Okay.
I would be cautious. I would agree. And globally it's there. US, this market is the second longest bull market. It's already 8 years old. So it's on its last legs. Same with us. We need the economy to catch up, but I am sanguine that the economy will catch up in the next year. And second, political stability will get some valuation, but valuations are stretched.
And the markets broadly will remain where they are? I mean, I know it's a projection question, but...
No, they'll go up. They'll probably go up because of the liquidity and all that's happening, the frenzy.
So therefore people need to be more careful? Or
yes. People have to be careful, be diversified and invest only what you can keep away for 3 years. So invest for the long term. They'll probably dip also, these markets. So it's not going to be a straight line up.
As they always inevitably do. And a good time to obviously government to continue to offer paper or public offers.
Definitely,
and public offers.
It's a high level, but there's no euphoria as such. Except small cap, mid cap, you can see there's a bit of euphoria. But overall in the market, you're not seeing headlines, and you're not seeing market being circuit up every day, which then the bull is tired.
Okay.
So we have really not gone anywhere in the last 5 years. Market has been flattish.
Right.
So I'm not that afraid, but the correction will come, and that will come more because of global reasons.
Right. We've run out of time. Thank you both for joining me. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.